We are back at it again here with another video with Invest for Tomorrow. To all the first time viewers and investors, welcome to the channel. To all the subscribers, welcome back. All I ask for in return is for you to smash that like button to let me know you watch this video. Helps out the YouTube channel and lets me know you appreciate the time and effort I put into making these videos. So here we are with CEI, and CEI stock is pulling back a little bit. We're gonna look at it here with 42 Vision on the 1 day and the 30-minute. But before we break it all down and we jump into the data that I have to share with you guys that you definitely won't want to miss, we got a lot to cover here that is looking very opportunistic if it turns out to stay within these levels. I have to share with you guys the home run of the day, guys. We mentioned this one pretty early on in the morning, and if you want to become part of this, check out the link down below in the description to the Discord. We look forward to having you join us, and we're going to jump right into it here with CEI. This home run cannot be overlooked. This was spectacular. So the home run of the day was beyond expectations, and if you want to get early on in opportunities like these, check out the link down below to the Discord, and we'll be looking forward to having you join us to become part of a growing community of investors all looking to learn and grow together. So the stocks I mentioned this morning were DWAC, RMED, and NXTP. Every single stock gave us 3 to 5%, 5 to 10% jumps, but our home run of the day was beyond spectacular, guys. Beyond expectations, beyond just the word spectacular. I mean, in a single day, we caught this one way down here in the 11s in the pre-market as things were starting to pull up, consolidate, and it started to take off in a matter of minutes, nearly up 100%. And for the rest of the day, it just continued with momentum. You could see it there with 42 Vision, which is something you can gain access to as well by joining the 42 Vision tier level, and it gave us a highest point of 480% plus. This was beyond expectations. We strive for opportunities every day of 20% or more. That's a home run in a matter of minutes to hours, but this was just phenomenal. And if you want to become part of this and a learning and growing community of investors, check out the link down below in the description to the Discord. We look forward to having you join us. Let's jump into these charts. So here we have CEI pulling back downwards, and it's getting closer to the support level that it bounced off of yesterday. And this is where it's starting to get very interesting if this is true weakness or a setup for the next bull run, right? In the middle of pullbacks is where the beginning of the next leg up and bull run happens. But we need to see how this is affecting the 1 day as well on 42 Vision, because if it's transitioning into weakness and it did not stay fully green candlesticks, then that is something we need to watch, because this is super important. And 42 Vision is literally showing us clearly that there has been a lot of weakness today. You can see that most of these were red, and it's showing the fact that even though it's pulling downwards, it has stayed above the support of 157. But if it gets broken through, we have to reanalyze everything here and see what's going on, because it definitely is moving pretty fast to the downside, and it almost seems like things got rejected here, and that's going to be a pivotal area for the bulls. Huge number for the bulls to break through to even get closer to newer highs, and that's 190, 191 give or take. But let's look at it here on the 1 day and see what it's showing, because this is very important. So on the 1 day, we are seeing the first leg of weakness. Okay, we had leg ups, and now things are kind of just stomping down, but it did not transition into one of these. Okay, green with red borders is weakness, but green with green, it's not weakness, it's just a pullback. Now it could transition quickly to weakness if it continues and breaks through supports, which is what we're looking at here, 158 based off the 1 day, and on the 30-minute it's a little bit below that or close to that. This is super important because you can see the size of these candlesticks, and this one's just kind of slowly fading away, right? It's super small compared to the others, that either it could bounce right back up to another bigger candlestick or the beginning of a transition to consolidate and slowly fall. But again, when we look at it on the 30-minute, this 1 day candlestick is still showing strength. We have not seen a complete transition, so that is important to keep in mind. But on the 30-minute, you could see here how things have been weak, and this is showing the possibility, right, of potential. Why? Because in these pullbacks are the setups for the next bull runs, and right there we have it, 157, 158. As long as it can stay above that, I don't see extreme weakness. If anything, this is going to be a battleground, right? An area where the bulls and the bears are pulling back and forth, having a tug of war, and trying to win this one. Also, it's going in towards the end of the week, so the weakness could continue. But if the weakness turns out and turns into a consolidation, right around this area, and does not break through 157, that is a clear sign of strength. And the first resistance level the bulls need to break through to start momentum at least is 176. They need to break through that, turn it into a support to reach newer highs and new resistance levels beyond what the chart is showing. And now we're going to look at the other resistance levels that are key for the bulls to even have any further strength. But before we do, let's look at some of the data here with the short volume and also days to cover. Here we have CEI's days to cover and the short share volume. You could see a big spike in the short share volume in the last several days. It went from the 26, 31 to the 40s, and now we're in the 50s. So the shorts are putting on the pressure again. Another thing too is the days to cover, guys. I've been talking about this before. The 0.13 is a little bit higher than we wanted, and also a little bit better than where it was. It was near 0.06, 0.07, but 0.14, 0.13 are still low days to cover. It gives some flexibility to the shorts and the bears, and you could see it in the chart. That's what they tried doing yesterday, and that's what they're doing today, right? They cover really quickly and then they re-short. They cover really quickly and then they're re-shorting here in the last 2 days. So you could see the difference in the short share volume in these last several days as things started to pick up. You could see it right there on the dates that are actually here and submitted, and things started to pick up really fast, and all of a sudden it's higher now. Yesterday and today it must be just as high or even higher or close to it, putting an impact on the chart and the stock overall. Another thing too, the volume, okay? It was a lot higher on these dates than today, and also the average 10-day volume. So volume is so important as well to watching correlation, because volume, even though a lot of pressure is selling out, there's also the volume of those that are coming in. When volume is pretty high, sometimes the inflows outpace or outweigh the outflows. But right now, outflows in shorts and bears are dominating the chart. And then you can also see here how short shares availability is 400,000. The last several days it was near zero or even less, and all of a sudden it's higher. If this goes down between today and tomorrow, it goes to show the flexibility the shorts have, as well as how many shorts are repositioning themselves and starting to short at these levels, hoping or at least trying to drive the price down past 157. And we're going to talk about here in this chart what it means for the stock if it breaks through that level. Now, what it means for the stock is if they break through 157, the bears are trying to dominate. We'll have to see if the bulls within 157 and down here at 145 try to reappear pretty quickly before this escalates even lower. If not, the bears in the shorts are dominating, as well as a lot of FUD, fear of missing out, is actually making people say, you know what, I don't want to miss out on these gains that I already made, or I'm going to cut these losses before it gets worse. A lot of uncertainty and doubt could come into the charts and the behavior as well. So if 157 gets broken through, it is very important to watch between 145, 157. And if 145 gets broken through, the lowest point here of the consolidation was 132, and then way down here at 117, and then $1. But before even worrying about those levels down here, the closest one is 132, and we'll have to see if a bounce can happen, or if this is not a setup for the next bull run, it is actually a downtrend of weakness and shorts taking advantage of the days to cover being so low, and also short share volume going up and down every single day, and then the availability as well